You know you missed the last one.
Morning. Jim Chalmers and the Finance Minister, Katy Gallagher. They seem like they're in a pretty chipper mood this morning. Let's listen in.
Okay, let us get sorted for a sec. You ready to go, Katy?
Yep.
Okay, everyone good? Okay. This budget update and this government is all about responsible economic management. Responsible economic management, it's what puts downward pressure on inflation and eases the cost of living. And because of our efforts, we are getting the budget in much better nick and making more room for our priorities, and that's what these numbers that we are releasing today show. Our strategy over the past 18 months has delivered an historic turnaround in the budget position, but we know that there is still much more work to do. Our government's economic plan is at its core about three things: easing cost of living pressures, repairing the budget, and investing in the foundations of growth in our economy. Now, we understand that Australians are doing it tough and our economy is slowing, and that's why we are rolling out tens of billions of dollars in cost of living relief. It's why we are fixing the budget and why we are making welcome and encouraging progress in this fight against inflation. Now, last year we delivered the first surplus in 15 years. This year, a much, much smaller deficit, and you're seeing less debt and smaller deficits over the 4 years of the forward estimates as well. And because of our efforts, we have less debt than any major advanced economy. Now, the mid-year update that we're releasing today shows that the government has returned 92% of upward revisions to revenue since the May budget and 88% of revenue upgrades since we came to office. We have also identified almost $10 billion in savings, which means almost $50 billion in savings over the life of our government, and I know Katy will want to elaborate on that in a moment. And if you combine that with some modest tax changes, we've identified $11.6 billion in budget improvements, which total $72.7 billion since we came to office. So a big part of what we are banking today are the upward revisions to revenue, but there are also decisions in this MYEFO to substantially improve the budget position, including when it comes to savings and reprioritisations in the budget. Because of our efforts, we have almost wiped out this year's deficit. We are now forecasting a much smaller deficit of $1.1 billion in 23-24. This is an improvement of $12.8 billion compared to the budget, and it is a $55.4 billion turnaround compared to what we inherited for this year. We are not yet forecasting a second surplus, but we are within striking distance. We have given ourselves a chance, but we aren't there yet, and we've been deliberately cautious and deliberately conservative. We've seen in recent times, under our predecessors, what happens when you overpromise and underdeliver. We've been determined to take a different approach to this, cautious and conservative when it comes to revenue upgrades, because of the uncertainty and the volatility in the global economy and also in our own domestic economy. Now, over the 5 years to 26-27, the underlying cash balance is improving by a cumulative $211.4 billion relative to what was expected at election time. Gross debt as a share of GDP is expected to peak lower at 35.4% in 27-28, before declining to 32.1% by the end of the medium term. We are expecting to avoid $145 billion in interest costs, and debt is projected to be $450 billion lower by the end of the medium term because of decisions that we've taken, whether it's banking or saving or in other parts of the budget. So through our spending restraint and by banking upward revisions to revenue, our economic and fiscal strategy is working alongside monetary policy to ease inflationary pressures in our economy. We know that Australians are under the pump. We know there's no shortage of challenges when it comes to the economy, global and domestic, and the budget itself. GDP growth is forecast to moderate in the near term and unemployment is expected to tick up. These are the inevitable consequences of higher interest rates, moderating but high inflation and global economic uncertainty. Inflation is moderating, but it's still too high. Global oil prices drove a near-term uptick in the inflation forecast, but Treasury still expects inflation to return to its target on the same time frame as it expected at budget time. Despite these challenges, we are making welcome and encouraging progress when it comes to the economy. Unemployment is near historic lows. We've seen the longest consecutive run below 4% since monthly records began. The participation rate's at record highs. More than 620,000 jobs have been created since we came to office, which is a record for a first-term government. And our employment growth is faster than all the major advanced economies. Wages growth has picked up to its fastest annual rate since 2009. We've seen 2 consecutive quarters of real wages growth. And annual real wage growth is expected to return in early 2024. So the government has 4 big priorities as we finish 2023. Easing the pressure on Australians, strengthening Medicare, building a future made in Australia, and securing our place in a world of churn and change. Every one of those things is advanced by the responsible economic management, which is at the very core of this mid-year budget update that you have before you now. Responsible economic management is a defining feature of this budget update, and it's a defining feature of our government as well, and we're making progress, as you can see in the documents that we are releasing. I want to thank Katy Gallagher in particular, but also all of the ERC colleagues and the Cabinet and the government more broadly. There's a lot of collective effort that goes into delivering such a big improvement in the budget position. So I appreciate Katy's work in particular. We're going to hear from her now. Then I wanted to cover off on 2 more issues and then take your questions. Thanks, Katy.